Welcome to Perisai Petroleum Technology Berhad's annual general meeting. 2013 was a year where we further strengthened the foundations of progress made over the last few years as we continued to fuel our growth. We strengthened not only our business, but also our corporate governance, risk management, and business processes and procedures. The year intensified our progression from a charter-dominant business focus to a more operational one. This is in execution of our strategy to focus on two key operational areas, that of drilling and production in the upstream oil and gas segment. A significant event in this progression was the operational startup of our production division, which saw our floating production storage offloading vessel Perisai Camellia being deployed to work in the Camellia field. At the same time, we also focused on a host of related activities throughout the year in preparing our drilling division for full operations. Perisai Camellia's operational startup, as well as the upcoming commencement of the drilling division, marks a significant milestone in Perisai's evolution from a charter-based organization to a more operational one. For the financial year 2013, Perisai achieved total revenue of 111.7 million ringgit, down 16.7 million ringgit when compared to the previous financial year's top line of 128.4 million ringgit. Similarly, profit after tax weighed in at 82.4 million ringgit as compared to 2012 financial year's results of 118.8 million ringgit. The previous year's result was better for the group, largely through the contribution from our two strategic assets of Rubicon, a mobile offshore production unit, and the Enterprise 3, our derrick and pipelay barge. 2013 saw the end of charter for these two assets, and they are now undergoing general maintenance and upkeep works while we look for fresh opportunities to redeploy these assets. Operationally, it continued to be a busy and exciting year for Perisai, largely driven by the operational startup of our production division, as well as the preparation of the drilling division to full operations. In our production division, we completed the acquisition of the Perisai Camellia, and she is now deployed to work for Hess Exploration and Production in the Camellia field, 300 kilometers off the east coast of Peninsular Malaysia. Contracted for a 3-year firm duration in the Camellia field, Perisai Camellia would support Hess's early production system, and it successfully attained first gas in November 2013. Over in our drilling division, the Perisai Pacific 101 was officially named in the beginning of 2013. We proceeded in the following months to strengthen the fleet size of the division by adding 2 new-built jack-up drilling rigs. These 2 additional jack-up drilling rigs are also being built in PPL Shipyard, and the total investment by Perisai for the 3 rigs is $627.5 million. Perisai Pacific 101 was successfully and safely launched in September 2013, following close and careful management of the construction process by us and the shipyard. This was a major milestone, as it has just been 17 months since we contracted for this rig. Our excitement has recently been capped with the award of a 3-year contract by Petronas Carigali for Perisai Pacific 101 to work primarily in its fields in Malaysia. It also demonstrates the ability of local companies in building and putting to work high-technology assets and undertake specialized operations in the oil and gas industry. Our offshore support vessel division, which owns 8 offshore support vessels, OSVs, continues to perform well and in a stable manner. Long-term charters for these assets provide earnings visibility for this division right through to 2015. In the third quarter of 2014, we plan to add another anchor handling tug to our fleet of 8 offshore support vessels through the acquisition of Liwek Robin at a price of $7 million. This acquisition will come together with a fixed-term charter of 7 years and will contribute earnings to this division immediately upon joining our fleet. Good corporate governance is an important obligation, and we consider it as one of the key pillars towards delivering value to our shareholders. In the course of 2013, we met and complied with the Malaysian Code of Corporate Governance 2012 by implementing its recommendations. In April 2014, we grew the share capital of Perisai in a fundraising exercise by issuing 108.42 million shares priced at RM1.53 per share. This placement of our shares in the hands of investors was fully subscribed, reflecting the investing community's confidence in Perisai Group. Perisai remains focused on maintaining the highest standards of health, safety and environmental practices. We continuously review our processes and procedures to improve our HSE policy. Over the course of 2013, Perisai also undertook several CSR initiatives to meet its obligations as a good and caring corporate citizen. For 2014, we see activity levels to remain high in the oil and gas industry, both domestically and in the region. The Malaysian oil and gas industry will continue to benefit from Petronas and other major oil and gas companies' spending, and this will directly benefit Perisai's various divisions. Our demand-tailored assets will continue to find its niche and drive our growth. We are confident that the positive outlook in the oil and gas sector in Malaysia, as well as in the region, will continue to provide the demand for our assets and services going into 2014. Thank you for all your continued confidence and support, and we look forward to another exciting year ahead.